I want to introduce you to the Heikin Ashi candles. The Heikin Ashi is a really nice alternative to the standard open, high, low, close candlestick charts that we're normally using. Most traders use the open, high, low, close, and it gives us the most detailed information. With an open, high, lows close, we see all the information of that candlestick printed properly and accurately within that candle. So if we're looking at any candle in here, we know exactly where that candle opened, where the high was, where the low was, and where the close of that candle was. With a Heikin Ashi candle, it's not quite the same. We're not going to get that same information. Now, Heikin Ashi, again, is a really popular alternative, but it can get people into trouble if they don't understand how the Heikin Ashi candle is formed. I want to show you how the Heikin Ashi is formed. I want to show you how you can use the Heikin Ashi candles to your advantage, but I also want to show you the downsides of the Heikin Ashi candles so that you don't get caught up in something that's not actually happening. With a first look at the Heikin Ashi candles, you're going to see how much smoother the market is. The market with these HA candles have a very nice smooth flow to them. It's a lot smoother than the real candles. Now, from here on in, I'm going to call the open, high, low, close candles the real candles because that's what they are. And the Heikin Ashi, if I say that word too many times, I'm going to start saying it wrong. So I'll call it the HA candles. It's just a lot easier for me to say it. I'm going to say it over and over. Now, the HA candles are very smooth, and we can use that smoothness to our advantage. But at the same time, we have to realize that smooth aspect of these HA candles can give us some false information. Now, if we take a look at the formula for these HA candles, what we're looking at, and forgive the blue dot, this is in my Canva studio, is the HA open, close, high, and low, and how they're calculated. Now, you can read these formulas, but the short of it is the open of a Heikin Ashi candle is in the middle of the previous Heikin Ashi candle body. The close is the real candles, open, high, low, close, all added together and divided by 4. So it averages that real candle. So the close of the Heikin Ashi candle is not in the same place as the real candle closes. And that goes for the open. The open of the HA candle is not in the real RC candle's open. If the Heikin Ashi high is a wick, the high is going to be the high of the real candle. If the Heikin Ashi low is a wick, that is going to be the low of the real candle. Now, we're going to zoom in on this Heikin Ashi. I want to show you how the Heikin Ashi opens. So we've got this candle right here. We're going to use this as our example candle, and I will even zoom in a little bit. So let's get rid of that, get zoomed in here. We're taking a look at this candle right here. This candle opens, then it goes up and down, and then it closes. This next candle opens. It is going to open right here in the middle of that previous candle's body. And we see that for every candle, where every candle opens is always in the middle of the body of the previous candle. Now, there are pros and there are cons to this, and I want to make sure that you know both of them. And now, when we move on to the close of a Heikin Ashi candle, what we see is a real candle in real life, an RC candle, and the close is going to take the low, the close, the open, the high. It's going to add all of these together and then divide it by 4. So we're going to have a close that is somewhere in here. So what we're seeing is the real candle close being averaged, and that gives us the Heikin Ashi candle close, which is not in the same place as the real candle. What we're going to see is a Heikin Ashi close, maybe right here, but the real candle might be closing up here. So if you're getting into a trade expecting that when you enter at market at the Heikin Ashi close, you are never going to be entering at that same price. You're going to be entering in a much different place. Now, it's really important that you know this. Now, this trips up an awful lot of traders. So as long as you understand this, this is going to help you a lot. Now, I am going to give you an indicator that does show where the real candle close is on the Heikin Ashi candles. You can download that indicator for Tradingview in the description below. So with that, maybe we should take a look at that. I have that indicator on my chart, and let's just take a look. Now, the dots are very small, so for the video, I'm going to make the dots much bigger so we can see them. Now, these dots show the real market closes. When we see a Heikin Ashi candle like this, where the wick is quite substantial, the actual close is not where the HA closes, but where the RC closes. And if you are entering a trade thinking you're getting in down here, you're not. You're getting in a little bit higher. You're getting in at a price that may be a surprise to you. The HA close and the RC close are not going to be the same close. Now, the ways to take advantage of these Heikin Ashi candles in a trending scenario is we're going to see that the bottoms of the candles in an uptrend are going to give us generally flat bottoms. So we're looking at a market that moves up. We have this first candle that starts to move up. It's a nice size candle. It's got a wick on the top. That suggests that there's some really nice market momentum. We have a flat bottom on that candle. Now, I'm going to delete this. I'm going to zoom in because I noticed in some of the videos, my candles are a little small. Let's zoom in. So we're looking at the flat bottom of the candle, a flat bottom, and we see that almost all the way up. So what we can do is manage the trade along these flat bottoms of the candles. So as these Heikin Ashi candles are moving up and we've entered a trade, let's say we're in the trade in this area here, we're going to be placing our initial stop loss generally where we would place it. But when this candle closes and then continues to move on, we can use the flat bottom of these candles to manage our trade. As long as the candles are showing us flat bottoms or very small wicks, we have an idea that the momentum is still fairly strong. Once we start getting a bigger, lower wick, we will start getting the impression that that momentum is starting to fail, that that momentum is starting to fall off. Now, we could either get stopped out at that lower wick or we could exit a position because we're getting a heads up that the market may change direction. Now, if I zoom out a little bit, let's move over. So we get a pullback that was alerted to us by this lower wick. Now, I'm going to add a moving average to this chart. I'm going to show you how we can use the colors of the candles to make a trade. And we can see with this how the price moves away from this moving average. The market pulls back and then moves away, pulls back and moves away. This is your typical trend pullback trade kind of scenario. What we'd be looking for is a market to move in one direction. And in this case, we're above the 34, so we're looking for uptrends. When we have that uptrend, we're looking for the candles to change color as a pullback. So we get that color change in here, get a color change in here, get a color change in here, even in here. So we're looking for the price to pull back towards that moving average, and as it pulls back to that moving average, it gives us that color change. And then when we get that first Heikin Ashi candle that changes back into that trending direction, we could be looking to place a trade. So if I get rid of this, what we could be looking for is an opportunity to go along in and around this first white candle. We could place an entry that's a little bit higher than the high of that candle because that is a wick that is the actual market high. Or when this candle prints white at that close, we could go along at the close of that candle. Now again, as you know, the close of that candle won't be the HA close, it'll be a little bit higher. But if you know this to be the case, this makes this entry a little bit safer. We see the market move up, we can manage it underneath the lows of these flat candles. When we get a pullback, and we see that here, we get this first white candle moving in that trending direction. We could be looking to enter that trade when that first candle closes in the trending direction. Market continues to move up. We can manage the trade under those lows, those flat bottoms or the small wicks. When we get the big wick, we could be looking to exit the trade. Now, this is a really common technique when you're using Heikin Ashi candles. We're looking for a trend. We're looking for a color change pullback. We're looking for a color change back into that trending direction. So let's take a look at this on something to the downside. We'll zoom in a little bit. We've got a couple of nice opportunities in here. We've got a market that is underneath the 34, pulls back, color change to the short side. The market moves down quite nicely. In here, we have some color changes, but the market hasn't pulled back to that moving average, so I'm not entertaining those. Market moves up, then it moves back down, and now we get some color changes again in that trending direction. We get a color change to the downside, market moves down. Color change to the downside, market moves down. Color change to the downside. This one has a very long lower wick, so you have to be aware that the entry for this is probably a little bit lower, probably something like this. You could wait for a little bit of a pullback or a retrace and enter at a little bit better price, and then we move down. And as that trade is moving down, you're in this trade. You can be using the tops of these candles to manage your stop loss. Eventually, this one might take us out. And because of this candle, it is white. It's got big wicks on both sides. There is a strong likelihood that we're going to see a retrace. Now, the market does psych us out a little bit. It bounces down before it moves up. But getting out of the trade at this area is perfectly fine. That makes for a really nice trade. So using these Heikin Ashi candles in this way can really improve our trading. Now, before I let you go, I want to show you one more thing. I want to show you these Heikin Ashi candles on a stock that gaps. Now, Heikin Ashi Ashi candles do not gap. We will not see gaps with these HA candles. When you're looking at currencies, you're not going to see a ton of gaps, but when you're looking at certain stocks, you will. We're taking a look at this one. This is the Australian dollar, US dollar. We have a gap in here, and that's really the only clear gap that we see. Candles close and then open generally at the same price when you're trading the currencies. That is not always the case when you're trading something that is not a currency. Let's take a look at Tesla, for example. Tesla on a smaller time frame doesn't look too bad. Let's take a look at Tesla on a higher time frame. Tesla on a higher time frame is gapping like crazy, and it makes it very difficult to place a trade with a high level of certainty. Now, I'm going to get rid of the moving average here just so we can see the chart. Let's add those Heikin Ashi candles to this very gappy market and see what we can see. What we have is a much cleaner, much friendlier market to trade. We can use all the same techniques that we were using before. The Heikin Ashi color change, the Heikin Ashi trailing stop method. What we're seeing is a market that generally gaps quite badly. Let's go back to that. See a market that gaps quite a lot. When we add these Heikin Ashi candlesticks to the chart of a market that does gap quite a bit, we get a much cleaner presentation. We get a much easier way to look at the market, giving us much cleaner, much simpler signals. So that is the secrets of the Heikin Ashi candles. I do use the Heikin Ashi candles in my trading. I use it often enough that I have it as one of my favorites in Tradingview. When you go to your bar style at the top and you click that little down arrow, you'll be presented with different styles that you could use. I favorited the candles, but I also favorited the Heikin Ashi. And with those, they're the only ones that I use. Because they're starred or favorited, they both appear at the very top. So I hope you can take these Heikin Ashi candles and apply them to your trading.